Your trade of the day, it's going to be PayPal today, and there were a lot to choose from when it comes to earnings. So much movement, so many opportunities. As always, brought to you by Day Trade the World. Get your journey started the right way in the capital you need. I'll tell you, usually I'll do like a higher time frame chart for you, but the real story is the volatility in the after hours. Now let's get one thing out of the way. If you're looking at these after hour moves, when you start getting these top and bottom line algos reacting to it, and then you get the guidance and they digest the report. This is what we've been seeing lately. Head fake to the upside, gets as high as the low 80s here, and then an absolute flush. You're down in the 66 range. I mean, it's completely insane. 25% range, top to bottom, absolutely nuts. But what can you glean from this? Now, if I pull this a little bit further back, you would be able to see, I think it was the day before, you did have this 75 area, just a little bit higher than that was support. If you look at the recovery and where we're about to make a bounce, the initial bounce at about 71, you kind of close at 71, and then you have your pre-market low at 71. So that gives a bit of a target area to play inside of where there's so much room. The way I look at it is this. You break out from here, and let's say we had opened up here, and you break out from that top 75. You have all that room to an 83 if you somehow are bullish on the stock. If you're below that 71 level, it becomes a little bit more clear. You've got room down into 66. Well, what do you do when you're inside of said range? When I sat down, I was thinking, you've gapped into the downside, but you have recovered very significantly off those lows. Square block was actually up pretty significantly as well. There were signs, 830 number was pretty good, looked like we were going to be upside, but you're holding this 71 area. So it's that gap down, holding some strength all morning long. I was thinking breakout, and then of course we had the jobs number at 830. You had a tight consolidation setting up so well for a top break at 72, but 830 hits, and you're already breaking out off that level. Do I want it now before the open? Not really. So I didn't have that stop trigger in there. And instead of like old Neil a year ago, or maybe in my youth, a long time ago, I might have thought about chasing this at each one of these consolidation levels, saying, okay, now it's breaking out to the upside. But sometimes you've got to understand, do not compromise on the price or the entry that you want. So I sit it all out, not thinking short at the open either. I really just want the long off 71, and then we get the gift. It falls all the way down in. I actually start this one at 72, and it's like, you get a fill like this, the first thing I want to do is back off. And you would have heard me say this on the live show. When I got that fill, yeah, I need to see it bounce off 71 before I'm adding to this. Not going to do it till I see it bounce. So there you go, right there. There's your bounce off 71. No chase, comes back to about break even, goes in the money a little bit, and then a flush to the lows. Once it bounces off the lows, then I'm back in. Show some rejection back at 22 with that first dollar. Take a couple legs out. This is in the context of crazy whipsaw action in the morning in the overall market. It tries to make the top again, fails at VWAP, pulls back in, get another leg out. At this point, I'm thinking it's pretty binary. If we break out, we should head to the top end of the range, or I'm going to be reloading in front of 71. I said this to myself. You should be holding for that 74, 75 area. Yet, when we got about halfway into this channel, it was 73-ish. The market was making a lower high. I got spooked. It was bad news. And of course, I set myself a trailing stop in there. Get trailed out. There's your 75 top. Only a little bit later. Nothing is ever going to be perfect. But the thing about it, we're all hardwired to take that profit, to see the worst in that opportunity or the worst in the moment. It's that fight or flight in all of us ingrained. So what you always want to try to do is build towards that. I'm going to call myself out for looking for that range, holding the trade, getting the entry point, but then still setting that trailing stop. And what I know was that last leg that I wanted to be holding on to. Showing some signs of strength. With the market on the lows, by the way, worth noting, holding a higher low at 72. As a matter of fact, I do favor a dip buy in here off that support. Relative strength in a stock that is down on the day, but trading well inside the range of the nonsense that we saw in the aftermarket. Always have a plan of action. There's always these types of plays and even more when it comes to earnings season. Glad we could have this one for you as a trade of the day. As always, brought to you by Day Trade the World.